Okay, so good evening, everyone. You're welcome. You're welcome. Welcome. Welcome, guys. Welcome, guys. Good evening. If you can hear me loud and clear, just type one in the comment section. Type one in the comment section. Yeah, welcome back. Welcome back, guys. If you can hear me loud and clear, just type one in the comment section real quick. Let's head straight to today's section. I don't want to waste any of our time at all. I just want us to go straight to the points, and yeah, we're done for today, and that's it. Okay. So if the network is clear, everything is smooth, so we can just kickstart. Let me update others and tell them that we are live. Um, okay. Okay. So yeah. Good evening, good morning, good afternoon, depending from the side you are joining us from. Yeah. Welcome, guys. Welcome, guys. Good to have you guys back. Okay. So let's, as we normally do, let's give others 5 minutes to join us. Maybe they're just trying to get their stuff set up, like maybe their system, they're rebooting their system, or their you get they just give them 5 minutes. So once it's 9:05, we'll just kickstart. So 4 more minutes to go before we start. Right? So let's just give them enough time to join the call. So let's give them enough time to join. Okay, so today is the day we'll talk on trading psychology. We'll talk on a bit of risk management and a bit of risk reward, and how to become consistently profitable, right? So that's one thing we'll throw more light on to this class. Okay, so 3 more minutes to go. Hope everyone is ready. Hope everyone is ready. Can we use an arrow zones on GPS? Yes, alongside trend lines. I believe you already know what trend lines are, right? So alongside, I think the Trader's Bible contains like the concept on how to use it on different pairs. I believe by now you should, maybe you've already gotten the Trader's Bible. I don't know. So it contains. Yeah, Stanley, I see you. Right? It contains how to use it to trade other pairs, TF and Amazon, even synthetic pairs, their risk management and everything, right? So someone said my voice is low. So let me know, is it low? So I know if I can fix it before we start, because I just want to make sure everything is fixed before we start. Is my voice low? Others are saying it's not low. Now don't start today. Okay, others say it's good. Okay, so majority takes the vote. Okay, so 2 more minutes to go for us to kickstart for today's section. Do you trade SMC or trend line? Uh, I think you're just joining. I don't know if you joined yesterday, you would have seen the strategy. We talked about the strategy yesterday. So maybe after today's section, go back and watch that video. You will know that I don't trade any of those. Right? I don't do SMC. Just pure price action, right? Pure price action. Okay. Okay. So I'm waiting. So 1 more minute to go for all others to join. Okay, so do well to share the link, do well to like, share it to those aspiring gold traders, those that would love to trade gold, or those that would love to at least become profitable now. Because I believe most people already have a strategy. You might even have a strategy, you don't know. You might have a strategy that is working for you, but since you're having losses or you're not yet profitable, you feel like it's the strategy's problem, or you feel like this, that. So today is the day where we talk on that very well, and things you should deal on, things you should work on instead, right? Than changing strategy and all that you get, because changing of strategy doesn't help, right? Changing of strategy doesn't help. I won't. Even if you want to join my mentorship or anything, I would say if you have a strategy already, so far as the strategy has, how will I put it? So far as the strategy has 100%, I say 100%, sorry. So far as it has at least 40-50% win rate, no problem. Working on other stuff, you understand, apart from um, changing the strategy or working on other stuff can still make you come out profitable, right? So that's one thing we'll talk on in today's call. I know it might be something you know before, but I'm just trying to at least drive your direction to that particular part. You understand? At least so that you can channel your energy to that part itself. Okay. Yeah. Does this strategy work? So yes, I mentioned the pay that it works on. Right. I mentioned the pays that it works on. Shift Windows X. I'm coming, guys. Let me take screenshot of this. Nice. Nice. Thanks, guys. Thanks, guys. I'm seeing the compliments online. Okay, so it's 9:06. Let's start. So yesterday, okay, let me change the screen. I think this one is a bit too wide. Let me switch the screen. Just give me a sec. Okay, let me change it to my laptop screen. Okay, I think this one is closer. Let's delete everything. I think it's messy a bit. Okay. So yesterday we talked on the strategy itself, right? We talked on the strategy, and yes, just a bit of the strategy. We talked on how we can use it to do top-down analysis. Also, we talked on the entry confirmations. We talked on entry confirmations, and during the entry confirmations, we talked of the neckline and the hanging man. Before I even started this class, I saw someone that was saying, "Boss, about the hanging man and all that. Throw more light on it." Now, this is continuation pattern market. You understand? Pushed back to retest that continuation pattern. According to continuation pattern, how many of my students we trade it? We said continuation pattern is indecision, right? So this was the retest. Then after that, this one now created its own new zone here, right? So I said if you don't want to look for neckline as confirmation, you can also use the hanging man and morning star, right? I showed you a bit of morning star, but I think the hanging man was the one we didn't really see because we were in live class, right? So now, if you look very well, when this market came back to retest this zone, this is it here. This is the hanging man here, right? So we said you can use it as confirmation instead of waiting for neckline break. Now you see the way this place, this is where the neckline now is. So you could see how far this was now. The candle that broke out very like long. So it won't. This person would have missed this trade totally, waiting for neckline, right? So now imagine after immediately just seeing this confirmation, this hanging man, boom, the market touches that zone, right? You know that this should be your entry of this particular point and your stop loss above this week, right? So that's one. Now coming back again to that zone to retest it again, to touch it again after respecting that 30 minutes and 15 minutes zone, right? So if you look very well, you see the hanging man happened again, happened here before it touched the zone. Still, it happened like 3 times here. One, two, and the third one, then boom, the market now started dropping, right? So that's I've thrown a light on the candlestick. I don't want to really like go in depth like that. But this is how it looks like. And the opposite of it is the shooting star, right? So yes, we use pending orders. Pending, remember I said the F and R zone, you see how we mark them? So those F and R zones, those points are the points we put our pending orders. If you tap on that line, even clearly you see the number here. But if you don't see it clearly here, you can click on settings. You understand? Tap on settings and go to coordinates, and there is it here. That's the number. It's exactly this one. It's the same with this one, right? So 28. So that's like how we put our pending orders. So if the market is big, sorry, I don't use buy stop or sell stop. We use buy limit or sell limit, right? So like this one, if the market was below here, we would set a sell limit, which means if it gets to this particular point, it should trigger us. And our stop loss above this week, same thing here. Our stop loss above this previous one, that is for those entering directly on sniper entry of that particular zone. Right, that's it. You see what happened immediately. Entered, melted down immediately. Same thing here, as it was entering, it melted immediately. Right, those are for those using sniper entries. You can use this candlestick pattern, not just the neckline. Right, so that's for that. Now I'm just giving a recap of what we did yesterday. Right, so we talked on the FNRs on how to mark them, how to use them for top-down analysis, and zones you should pay attention to, and all that. Now today, let's talk on risk management. Let's dive into risk management. Now I saw some of you fill the form, I think around how many people, but I didn't check this evening. So all those people that sent there would make sure we reply you after even this section. Today is the final day of this live class, right? So I'll try as much as possible to reply everyone. Okay, so if you have not filled it, remember, let me pin the Telegram channel again so you can join. And also I'll pin the new form again for today's section. Let me pin the Telegram. So just be piling up your question. Once I say start dropping your question, you can now start dropping it. But don't spam the comment section for now, so that everyone can access that Telegram link. Okay. Where is it? So let me pin it. Yeah, it's being recorded. Yes, Stanley, it's being recorded. So this is the link. You can, if you have not joined, do well to click and join now. Right. So because after this live session, I'll try as much as possible to be doing a live section. Once in a while, I can just maybe send a private link for a private class or something, a free one. Right. So that's one thing. Okay. So today let's talk on risk management. Let's talk on risk management, a bit on gold, especially on gold, because there's this video I dropped on how to calculate pips on gold. I was like seeing different comments. People were like, no, wrong information, and I was like, I'm using it to calculate pips, and I'm still losing the exact amount. So like, what is the wrong information there? Yeah, that's the problem now. No problem, Stanley. So I was like, well, let's just talk on risk management on gold. Now, first off, I think the easiest way to do this here, first off, this is the website I use, the platform I use to calculate my risks, my FX book position / calculator. So if you search my FX book, this is it here. Although this is the link directly, but I'm just showing how it looks like on Chrome. So if you search my FX book position size calculator, this is where it directs you to. This is the page. If you tap on go, this is where we are going to XAU USD. Please pay attention. All right, XAU USD. You tap on it. So now this is where we calculate our risks. Okay, I think that's an advert. Sorry, hope the network is okay. So because it's as if it's hanging from my end, I just want to be sure if the network is working perfectly. Okay. So now this is the platform, my Facebook position size calculator. So let's go back to our browser. So now let's use these points as an example, these entries. So sell the first time here. So this one was like zero, like little or zero drawdown at this particular point here, but this one had a bit of drawdown, and our stop loss above this week. So let's say 15 pips. Let's keep it 15 pips. Okay. So now target will be this zone, right? The next zone. Okay, so that's like 1 to 3 risk reward first off. Okay, now let's use this trade as an example. Let's take this one as an example, right? So now this is how to know the pips of your stop loss. For those that are totally new to trading view, This is where you can get this buy or sell order. Come to this point here, you can see where my mouse is, right? You can see where my mouse is. So tap on it. You can now favorite it to show exactly like this on the my FX book positions calculator, right? So this is how it now appears. Okay, so you see the short, long stands for buy, short stands for sell. So this red part is for the stop loss, and this green part is for the take profit. Take profit, profit is involved, so it means that TP, you used to hear people say TP and SL, so the full meaning is take profit, SL, right? Stop loss. Okay, so stop loss means that if it pushes up to this particular point where this red line is, it should cost me half of that trade. Now, this is one thing most people don't used to know, is that you can actually trade a small account. Like you can use what's it called? You can trade gold on a small account. I've done it several times, right? You can even trade your $50. You can trade your $20 on, depending on the ones you are using. I think XNS now has unlimited leverage, right? So I think that way itself you can even use any lot size, but you can still use proper risk management. You get, unlike there's a fixed leverage you can use now that it won't allow you to place some certain trades, but now I think they have unlimited, even higher leverages for smaller accounts, so I can use a certain lot size for it, right? Now apart from that, now this is it here. This is all what you need. I won't say you to do this to get the stop loss. It's really simple. So once you tap on this position, you have put where your stop loss is, where you want this trade, that if it gets to, you know that this trade is invalid. Because if this market takes out this high, this level here, it takes out this first one, takes out this second one, then it's invalid. That's why you see my stop loss is above both, right? So that's it too, right? That's why you see it's above the two highs here, right? So I know that if it gets to this point, it's invalid totally. Instead of, this is not like a neckline entries, right? So now look at this red part here, this first point. Let me zoom it very well. Just pay attention to this red part. Now, if you see this red part very well, hope everyone can see it. Okay, you can see 1.508, right? 1.508. Use 1,000. Use one is to unlimited leverage. I think it will work because I've traded $10 also on XNES unlimited leverage, and it works perfectly too, right? Okay, so now 1.508, you get, this is it here, the stop loss. So this 1.5, what you do is pick the numbers in front, then the first number after that point, after that dot here. That's the only numbers you need, right? So this here, it is what, 1.5. So this is what, 15 pips, right? This is what, 15 what pips stop loss, right? That's just all what you need. 1.5, that's 15 pips. Forget about all these points, 150 points. This is it here, 1.5, 15 pips. Now if you drag it down more, 1.1 now is what, 11 pips. If you keep on bringing it down, 0.7, that's 7 pips, right? Okay, yes, it only works when you have opened some certain lot size. Yes. So 2.1 here is what, 21 pips. So if I keep dragging it up, the stop loss. 3.0 here, 30 pips. Just keep paying attention. I just wanted to get to 100 and something so you see how it looks like. Let me shrink the screen so that you see it very well. So this is 5.6, that's 56 pips. So let's keep carrying it up. So now this is 10.4. This is what, 104 pips. You get, there's no how you say it doesn't have a dot. It must have a dot. See it here. Check your trading video. So far is good, one down. This is it here. So 10.4 here is what, 104 pips, right? So keep it 11.5, that is 115 pips. Okay, so let's bring it back to how it was before. So I think it was 15 pips, right? So this is 15 pips. This is how it was, right? So 1.5 what is what, 15 pips stop loss. Stop 1.5, that's 15 pips. So now, what you do now at this position size calculator is, now you come here, put your account size, I'm trading a $30 account, right? If you're trading $30, $40, $50 accounts, for those that maybe you have not traded to a certain lot size, so your broker is not allowing you to use unlimited leverage, maybe you can just wait. Maybe if you fund 20 or $30, I think that way it will work now, right? So now, let's say we have a $30 account or even $50 account. That's why I used to say from sometimes it's even good to have a side hustle, a work, right? That will be giving you money to fund your account. You get, not that you just carry everything and fund, though, but put an amount that you feel like, okay, my work is paying me maybe 80K, because I believe now at least salaries are still making sense now, right? So uh what's it called? So from there you can be like, okay, let me just fund 30, you understand, things like that. Right? So now $50, and then what is the risk percentage? You might not know the percentage, so you might ask yourself, how much do I want to risk inside this on this trade? This 1:3 trade, right? So inside my $50, how much do I want to risk? That's where it comes in, right? So now, the next thing is that if you don't know the percentage, if you know the percentage, if you say, okay, I want to risk $10 is 20%, if I'm not mistaken, right? $10 should be 20% of the account. If you want to risk $5 should be 10% of the account. So, but if you don't know the percentage, click swap with money. So once you see now, here it is showing risk ratio. Once you click swap with money, it turns to what? Money USD. All right? It turns to what? Money USD. So once it's money USD, now you can write the amount. Okay, now I want to reach $10 on this trade, right? Then it brings you to where stop loss pips. So this stop loss pips is now that pips we calculated was showing what 1.5, right? So that 1.5 now is what you do, what you put here. So we'll put 15 because it's 15 pips. Remember, 15 pips, 15 pips stop loss, right? So now 15 pips stop loss. Now it brings you to the trade side and size and the lot size, right? You get one lot, you already know this 100 units, 100,000 units, you understand? So now the minimal lot size on our MC4 and MC5 is what? 0.01, right? 0.01. So clearly here you are seeing the nano lot size. This is nano lot size 0.001. This is not, I think the only way you can see this is on MC5s, right? Not MC4, right? So now, and on gold you can't use this lot size, right? So 0.01 I think is the minimal on MC4 and MC5, right, for now. Right. Okay, so now we'll remove 10 here and bring it to the micro lot size, which is what? 0.01. I've deleted 10 and click what? Calculate. So it tells me that for me to reach $10, you get, I should use what? 0.07 lots on this my $50 account at this particular point. So if it hits me out, it will hit me out with what? 10 or $11, right? It will hit me out with what? $11. Okay, because why did I say $11 instead of 10 is because maybe spread and all that, and sometimes um you might enter the trade late, or you enter let's say for instance maybe the market has pushed up and as it's coming down you now enter, spread will push it down a bit, right? Market will not stay one place and tell you, Samuel, I'm about to move, or you enter first before I move. No, you get. And sometimes it might even be lesser because maybe while you are waiting to enter, if you have calculated it has pushed inside already and you enter the it now activates you around this area and things like that. So, but then again, that's around the range you should lose. Okay, so 10, $11, that's what you are risking. Okay, so now that's for this particular one. So if you make a mistake and not put, let's say you did not delete this zero, this is how it will come like, and you click calculate, it will give you a lot size that is way bigger down. Now this is it. It still shows you that you are reaching 20%, and it's now telling you to reach what? 0.67. Right? It shows you what? 0.67. Now, if you imagine this lot size is way big for it, you can't lose $10 with this kind of lot size. You will lose the whole $50, and this lot trade does not even hit you out. So that's why I say don't make that mistake, right? Don't make that mistake. It's what? 0.01, not 0.00. So make sure you delete 10. I think I made this mistake once when I was starting out last 2 years. Yeah. So what I did was I forgot to remove 10. Yeah. and because I was rushing, and now I click calculate. I was about to reach $100, but what happened at that particular point? As I entered, first off, I was like, this lot size is not like, since I've been trading, it has not given me this kind of lot size. For once, all of a sudden, why is it giving me this lot size? Well, I felt like, it's because after all, I'm not the one that calculated it. It's the position size calculator, right? I didn't even look at that and what's it called, the trade size at all. I just entered it, right? I just entered that particular trade, and all of a sudden, immediately I just entered, the amount I was risking, I was ready to risk on that trade was what I was seeing minus immediately 100. I was like, if you now hit stop loss, how much will I need? I had to close that trade like that in loss, right? So don't make that mistake. Make sure you remove 10, right? And click calculate. It now gives you the proper loss size, which is 0.07. Okay. Okay, so that's for that. That's how to calculate pips on gold and how to use proper risk management. Now, it's this risk ratio, risk slash reward ratio, showing 3.7 here, means that if this trade finally hits this TP point, this next zone here, if it hits that TP point, the amount you come out with is what? $37. Let's say it's 1:3, which means you should be coming out with times 3. Why I say 37 is because it's 3.7, right? So, but they say 1:3, $30, right? That is what you would come out with. Okay, so if you risk $10, you are getting times 3 of it if it hits TP, right? So that's one thing too. Now, if you look at this target here, is what the target is, what 5.7, which is what 57 pips, right? Yes, there's no BTC. You know, now one thing with all these what's it called, pairs that you don't find easily on positions calculator is because most of these brokers have different contract size for these pairs. You get, most of these brokers has different contract size. You see pairs like indices like stocks like you're starting as 100. You rarely find position stocks calculator for them. It's because most brokers has different contract size for it. So their 0.1 lot size might be their 0. It might be a 0.01 on another broker. You get something like that. So they used to have different contract size for it. That's why you see, or even in my this thing, the Traders Bible, I showed you how to calculate both easily without stress. Okay. So now let's continue. But today we are talking on gold. That's why I don't want to move to any other page or anything for now. All right. But let's continue on this gold. Now that is for this. Okay. That's for this risk management. That's for this risk management. So I mentioned the pair that this strategy works on yesterday. So now we've talked on using how to calculate your risks very well so that you don't go and lose an amount you were not ready to lose in the first place. Because once you do that, once your risk management is violated, your account is at risk. Now, in as much as you are seeing profit all online, you are seeing lifestyles and everything, make sure you use proper risk management at all time, because you can never tell when losses would come. Right now, one thing you should also know is that forex trading is not a get rich quick scheme. Right, trading is a gradual process. Right, it's a gradual process. Keep risking your $50, you are risking $10, $10. 1:2, 1:3, 1:2, 1:3. If it comes, losses comes, yes, fine. It takes away only 1% or that $10 you get. Just do it like that gradually. If your account now increases to 100, your risk might change. It might change to 20. It might change to $15. Now, if it increases to 200, gradually, it might even take 1 month before you get to that level, right? But if it increases to 200, gradually your risk changes. Then, if it gets to 500, there's an extent you can even get to that. You can now decide, okay, let me now remove this $100 and fund it here. I want to risk everything on this $100. I want to go hard with this $100 because now you have a capital, you have an amount somewhere. That's one thing this profitable traders does. This is one thing we do, because now we feel like, okay, this setup, I might take the same setup on all other of my accounts, and now on one account I'm ready to go big on it. Why? It's the same setup. Those ones are proper risk management, but this one now I'm going big on it. Why? Because I have backup plans. I have other accounts. Even that one I'm trying to go big on, I still have, like, I splitted it somewhere. Instead of doing like, okay, I want to take this 100 to 3K, 5K, right? But then again, that 100 I have like 500 somewhere. splitting it. So all these things are still risk management. But the only thing you only see the results of that one trade. And one thing you don't ask us, you don't used to ask is, do you know how many times this person has tried this particular stuff and it didn't work? That's where people get it wrong. Okay? So that's one thing. Now, let's continue. Now, for this strategy, I told you the minimal risk reward you should use, right, is what 1:2, right? 1:2 at all times. 1:2. If it doesn't give you 1:2, don't close. This is me telling you from experience. Don't close. 1:2. 1:2. Because now I noticed that the way Forex is programmed, I will say it and I'll keep saying it. It makes you hold losses and makes you cut your wins very fast. Forex wants you to do what? Hold your losses. You get the market wants you to hold your losses and do what? And what's it called? And cut off your wins very, very early. Okay? So now, but we are meant to do what? The opposite. I think this was what changed the game for me. When my boss was saying this, he said, it was just, I was editing video. I think I was editing video for him that day. And he made mention of this thing. I was like, actually, this is not the problem I have. Because then what I used to do, now I'm talking about how to be consistently profitable, right? What I used to do then is that I noticed that if I place trade, when it's going against me, right? If that trade is going against me, I can hold it. Like, because I'll be like, after all, I know what I'm risking. I'm risking $100. So nothing. I have an account of 1K. So on that time, it was majorly prop firms, right? Yes, it's being recorded. It was majorly prop firms then. Okay, and we have time limits to it, so you will rush everything just to pass it so that they don't take your account from you. Okay, so now I was like, then if I reach $100, if it's going against me, -50, -60, -70, 80, sometimes I'll still be holding. I'll be like, this thing will go hit my stop loss. This thing shouldn't hit my stop loss, so I'm now later turn in my direction. Things like that. Even -90 and it's now reversed back. Now, do you know what happens now? You are holding that losses, right? Quite well. Sometimes you might be like, okay, after all, anything that wants to happen, it should happen because I was ready to risk this, what's it called? This $100. You get. So now, but imagine that market just flashes in your direction. 50, 70, 80, 100. Sometimes you might go 150 and coming down again to 100, you might be scared and you just close it. You'll be panicking. But when it was going against you, you were not panicking like that. You were even holding confidently. After all, I've set stop loss, anything won't happen. You get. But immediately it flashes, you become impatient with it. Before you know it, you have closed. And now, do you know the psychology about that stuff is that as you close, do you know what your mentality? Your mentality or your emotions or your psychology at that particular moment will be like, I closed with profit now. Today was a good day. Today we did not lose. We closed with profit. Sharp guy. Right? The next day, you will do same thing. Right? Maybe you place a trade and that one just go direct in your. It does not even go against you. Just go direct in your way. Maybe 50, 100. You just close it again. You were risking $100, but now you're not even focused on what you are risking. So $100, boom, it hits you. You close off. Your account is up 2%. You know that joy and that your account is increasing. Maybe the next trade again, same thing. Your account is up $300. Right? Maybe that's for that week. Now, the next week, only on Monday, the next week, something that took like 3 trades to win, right? Only on Monday, you'll be hearing them complain like, bro, my account is in Jordan. How? Why? Right? So you ask them that question, how? I thought you were the one that said last week was a winning week for you. Last week you hit TP throughout, no loss. You get, because that's how they used to say it, right? They say they hit TP throughout, no loss at all. But why all of a sudden, just on Monday, week has not even started, the new week has not even started. Monday, everything is gone. So why? That's where this thing comes in. Now, it's not all about the strategy, because now at this particular moment, at this particular point, do you know what everybody will channel it, that energy to? They will channel it to their mentor and the strategy. That's where they will channel it to. They will be like, you should say this forest thing is for me. You get. Some people will be like, are you sure? Like, what's happening now? Are you sure my village people? Now I don't even think, say, this new week I'll be able to make another 4% and pass this account, or maybe make withdrawals and all that. and all of a sudden I'm in drawdown, deep drawdown like this, from 3% profit to what drawdown. How come? Right? So now this is where I what I said in our last class. I said what trading strategy comes in pack, right? Trading strategy comes in what in pack. Now, one thing you should pay attention to come out profitable at the end of the month or at the end of the week, right? Is what RRR, which is what risk to reward ratio. That's one. Please follow us, pay attention, close attention. Now I said what? Risk to reward ratio. Now for this strategy, it tells us that the minimum risk to reward we should pay attention to is what? 1:2. Right? Exactly, they start calling it scam, right? So that's the minimal risk to reward. Now I did an example yesterday saying, okay, if you started a phone business, right? If you started a phone business and you bought like 10 phones for 100k each, that is 1 million naira. If you want to sell it, won't you want to sell it with what? Profit, right? Won't you want to sell it with profit? You want to sell it maybe 150 itself. If you even sell it 200, you'll be so happy because you made money that day. You made like other money to add to your business and buy now 11 phones to make more profit, or even buying like 12 more phones now to make profit, right? So the same way you are treating your physical business, right? The same way you are treating your physical business should be how you treat trading. Yes. That's why you hear people say things like treat trading as what? Business. That is when you become profitable. You should have a well structured out plan. You get, have a well structured out plan. If you don't, there's a saying that you don't plan while you are in battle. You don't prepare for war while in battle. While in war, you prepare before you even go to the war. So that's why you hear people say things like you don't think while you are trading. Not while you are trading, you don't be thinking, had it been I use crazy lot size now, you would have thought of that before even coming into that trade. This trade is going against me. Let me shift my stop loss. You would have thought about that before you enter that trade. Right? So one thing you should pay attention to at this particular point is first off, treat trading like the way you would do your normal physical business. You not want to sell that phone cheap to, if you sell it 80k, 80k, 50k, 80k, 50k. At the end of the day, you might even not even make up to 500k if K is not taken. Right? So you might not just do this thing, make profit. So same thing in trading. If I'm risking $10, means I am using $10 to buy this phone. That's what it means. So if I'm risking $10 on this trade, it means that I've used $10 to buy a product in forex. So I've used it to buy this particular pair or XAU. I've used it to buy gold, but I want to sell off this gold at times 2 of what I use it to buy. You get? So now, if I sell it times 2 of what I use it to buy, what do you think at the end of the month will happen if I do it consistently? Even if there is loss, what do you think would happen? I will come out with loss. I will come out with profit. Sorry. Now let me show you. Let me show you something. Let me show you a calculation very quick. I will still show you a template how to do it easily. Now let's drag this up a bit. Please pay attention, because this is where it gets interesting. Now you don't want to hear this because most people here now want to hear about strategy. That's the problem. That's the mentality of a beginner's trader. That's the mentality. All these what's it called? All these how would I even call them now? Right? I don't want to even call names. But the main thing are these things. These are the things that can make you profitable in the long run. Right? This is what will make you profitable at the long run. If not, imagine doing 1:1, 1:2. Even in the physical business, doing 1:1, you are stagnant. If you are not careful, it will affect your psychology that you now want to increase your risk because you feel like you are not progressing. You want to do crazy stuff, and all of a sudden, boom, your account is gone. You get. So now let's say we have an account of $100 or $200, right? We have an account of $200. Or should I even use Profem as an example? Because most people are trading Profems nowadays. They don't even like funding these accounts. Right? Let's use prop firm. So let's say we have an account of 10K prop firm accounts, because this is like the common accounts that people do buy. Right? So now your risk per trade, what is your risk per trade? Your risk per trade should be 1%, right? Because I used to hear everybody say 1% and risk 1%, 1%, everywhere 1%, 1%. Right? So 1%. That's the common risk everybody use. Someone say let's use real accounts. Yeah, let's use real accounts. Let's use real accounts. Yeah, let's go. I love that. I love that danger there. I love that. Sorry. So now, just let me know in your comment section, if you had a $200 account now, how much would you repatriate? Let's see. Let's see. Be sincere, not because you're in live class. If you had, uh, if you had $200 account, how much would you repatriate? Let me know in the comment section. I'll pick the most common answer and use it as an example. Now, before you answer this question, this is what you should think about, because that's why I say you need to have a plan. This is what you should think about. Ask yourself, my knowledge on this strategy, with this knowledge I have on this strategy, can I lose 5 trades in a row? That's one thing you should ask yourself first before you even now start mentioning the amounts. Ask yourself, can I lose 5 trades in a row? If the answer is no, then you know the answer you should give me. If the answer is yes, then you know the answer you should give me. That's as simple as that. That's just it. Okay. So let's see. I'm seeing $20, 20, 20, 20, 20, 20. I think 20 is more common here. Yes, $20 is the most common here. Solomon said I'll risk it all. Guy, para. Maybe Solomon has enough capital, I guess. I think $20 is the most common answer here. Yes, $20 is the most common. So let's use $20, no problem. So let's say we risk $20. $20 of 200 should be 10%, right? Is it 10%? Yes, $20 is 10%. So $20 is the most common one. Don't worry, I've seen the answer already. So one thing you should also know when you risk it is know your risk appetite. If you tell yourself in your profit you are ready to risk $10, $100, risk 0.5 and see how you feel. You notice that you'll be even holding more trades longer now. You see the difference, because now it tells you that this risk you are now taking is below what you were ready to risk. Okay, so now let's continue. So now the risk per trade here is $20, which is 10%, right? So now the next thing here is, what is your minimal risk to reward? Right? So our RRR here, risk to reward ratio, should be, it tells us that we should use what? 1:2. Okay? So now, what is the win rate of the strategy? This is where everybody gets it wrong. What's the strategy's win rate? Now, I used to say something that even if your strategy's win rate is 30%, you can come out profitable knowing what to do, knowing if you know the right thing to do. Right? If your strategy's win rate is 30%, if you know the right thing to focus on, you can come out profitable. Now, what does 30% win rate means? It means that out of 100 trades, you lost 70 and you won 30. Out of 10 trades, you lost 7 trades and you won 3. Out of 20 trades, I think 70%, 30% of 20, let me see, of 20 trades, is it 14? Let me see, let me be sure. 30% times 20, 6 minus 20, yes, 14. So it means out of 20 trades, you lost 14 and you won 6. That's what 30% win rate means. So I will keep on saying it. If you know the right thing to focus on, even with that big loss and small win, you should come out with profit at the end of the day. You get, you should come out with what? Profit at the end. Imagine I lost 7 trades, I won 3, and I still came out with loss. I came out with profit. How? You get, that's why I said losses, yes, losses is part of forex. But though there are some losses that are not part of forex, don't quote me wrong. There are some losses that are total mistakes that we do continually without, because we don't journal our trades. We keep repeating the mistakes over and over again. Till now you have gotten, maybe you have stayed years on the chart, now you can now recognize that stuff. But had it been you used to journal your trade, you would have been able to track that particular stuff and know how to deal with it or avoid it. Okay, so now with that little win rate, you can still come out with profits at the end of the day, at the end of the month. So now, let's say our strategist win rate. What percentage should I use? Let me use 40 first. 40%. We'll still use that 30 and I'll show you how to deal with stuff like that. Now, how many trades do we take in a month? We have 20 trading days in a month, right? How many trades should we take in a day? I won't say you should take much trades in a day. 1, 2, 3 trades, that's max 3. For me, oh, like as a day trader, I don't know if you're a scalper, because scalpers can, they take multiple trades in a day, right? So for me, 1, 2, sometimes if I even trade 3 times a week, you get. It's not by taking trades every day. Less is what more, right? So now, total trades. So now we have 20 trading days in a month minus weekends. Okay, so that means, let's say we trade once every day, we take one trade every day. Okay, so now let's say we do 20 trades. So now, how do we know the wins and the losses? Based off this win rate, strategist win rate, because the strategist win rate will be the one to tell you the wins and the loss. Please pay attention. Now, how to know the wins and the loss here on your calculator? How to know the wins, how much you won, and how many trades you lost based off this win rate here is that, right? 40% is right. 40%. I know you might not be seeing the screen clearly, but just be typing what I'm saying now. 40% times how many trades? 20. Right? See what I just did? Let me do it again. It shows me 8. That's the answer it gives me. Right? So it means that we won 8 trades. Now 8 minus 20, it will give you minus 12, which is 12. So we did what? We now lost what? 12 trades. Okay? So that's what it means. So we won 8 trades and we lost more than that. We lost 12 trades. Yes, it's possible. It's possible. And the strategy is still okay to me. Yes. Now let's continue. Okay. So now when we are losing, how much are we losing per trade? Okay. When we are losing, how much do we lose per trade? We lose $20, right? So 20 times 12 is what? 20 times 12. How much is that? Please let me know in the comment section. Let me be sure that everyone is following. Okay, I should make my right up big on the screen. Oh, sorry about that. Let me see if I can zoom it very well. Okay, how about now? Is it now wide enough? 240, right? So now, some people be like, I don't blow the account now. That is when you lose 12 trades in a row. Is it even possible to lose 12 trades in a row? Then you don't even know the strategy, just leave it. Just leave it totally. So you have not lost the account because the losses won't come in a row, right? It doesn't come in rows. You can come. You see what I said now. Someone said account don't blow. You see, that's the problem now. You can't lose 12 trades in a row if you understand a strategy. How will you understand a strategy and lose 12 trades in a row? Like how possible? Even 10 trades in a row. You get. So that's one thing you should know. That's one thing you should do. What you should know, you can't lose 10 trades in a row. If you lose 10 trades in a row, then change your strategy. You don't know that strategy. Okay, so that's one thing, because sometimes it might be two loss today, one win tomorrow, one win, another loss, win. You understand? That's how it comes. You get, sometimes it might be three losses, then two wins follows, things like that. That's how it follows. Now let's continue. So now when we are winning, how much are we winning? Now this is where it comes in. When we are winning, how much are we winning? Times two, right? Why? Because the risk to reward is 1:2. So 40 times 8. What is 40 times 8? This is how it covers up. 40 times 8 is what? Now this is where you know if you blow the account or not. Who is dropping $5 now? Just let me know. 320, right? So let's put $320. So we won. No, don't worry. So we won 320, right? So now total. So this our total win or loss. So 320 minus 240. 320 minus 240. What's how much do you come out with as profit at the end of the month? Using 1:2 or small 1:2. Someone said Nepa. I love this Nigeria. We are in Nigeria, don't worry. $80. So you see, you did not blow the accounts. So those person that was starting, you are blowing your account, they did not blow your accounts. That is if you pay attention to this minimal risk reward. So the account is now what? Up $80. So your account should be total of what? 280 at the end of the month. So you didn't blow the account. You did. So notwithstanding the fact that we lost 12 trades, we won 8 trades. What happened? At the end of the month, we still came out with profits. Following what? Risk to reward ratio. Now, this is one thing, you understand? This is one thing that most of these profitable traders know, is that even if they have loss today, have tomorrow, it doesn't freak them, because they believe that one trade would recover two losses. Now, why I say one trade will recover two losses is just at the minimal. At the minimal. So if you are anyway and you are taking a trade or taking a signal and 1:1, at least it should give you 1:2. So that when you are winning, you should be winning times 12. But if it's 1:1, 1:1, then there's problem. There's problem. At the long run, you might not be profitable. You might not be profitable at the long, except you are lucky and they had winning streak throughout. Okay, so that's one thing too. That's one thing. So now with trades there, I think it should be 10 trades, because the risk per this thing is, that is when you are ready to lose. That means you feel like if you take 10 trades totally and all of them is losses, everything should be gone. No, that's not how it works. That's not how trading works. If you said you want to trade this $200 for 1 month, you can still trade it for 1 month. That's what it means. You get, so that's one thing it means. So today might be win, tomorrow might be win, and you know your account is increasing, right? So your account can't be stagnant. That's one thing you should know. Name the trades. Your account can be stagnant for like 10 trades. Yes, we know that it takes 10 trades to blow the account. That means if you are ready to blow the account with 10 trades, but so far as today can be win, tomorrow can be lost, the next day can be lost. You understand? Win, win, win. You get, that's how it works. Wins put your account way forward. That's if you know what you are doing, right? Wins put your, just that's in case. Okay, let's continue. So that's for minimal of 1:2 risk to reward, right? So that's one thing. No, I can't add Frank. You want to do Joe? I can't add you to Empower. It's not even possible. We'll still have our class, right? So I will come to this comment section. I think this comment section is distracting me. I'll come to this comment section. So that's for this minimal ratio. Now let's go back to 1:1. Now let's go back to 1:1. 1:1. I feel like let's do 1:1 also. Because you might be like, our boss, I don't used to do 1:1, but now this is where you know why you used to blow your accounts. Right? This way, you know why you used to blow your accounts. Okay. So now 1:1 means when you are risking 20, you are risking 20 to make 20. Sometimes even 19, sometimes even $18 you close. Some people $15 they will close. Right? Yes, I've traded $100 for 2 months. It's true with profits with conservative. Is it conservatively? Okay. Yes, that's it. That's it. You can trade it for a long period of time. So first, you are using proper risk management and paying attention to risk to reward. Okay. So now let's change this risk to reward to 1:1. Please pay attention. I'll soon stop this risk to reward and we'll talk a bit on psychology, right? Okay. So now risking $20 per trade. So what's it called? This risk reward means when we are winning also $20. Sometimes it might even be $15 though, because you might risk $20 and $15 you close because of fear. That's why we are getting to that yet, right? So now sometimes you might not even be able to hold a trade for long because why? It's because of your past results, and I'll tell you why. All right. So now, when we are winning, we want 8 because it's 40% win rate is still the same thing. So it means that 8 times 20 because our risk reward has changed to 1:1. So 8 times 20. Let me know in the comment section, please. Let me be sure you are following. 8 times 20. My God. I will not talk. 8 times 20. Some people will be like, they don't used to do it here, or they will talk it that, but you'll be doing it on your chart. Maybe it's Mondays, tomorrow, trade is starting now. Some might not even know what they are even risking. You just enter the trade with random lot size and be like, I'm risking $10. Meanwhile, had they use proper risk management, calculated it properly, the lot size they use maybe 0.02, they would have used 0. The position size calculator would have told them to use 0.04 instead. And that is if their stop loss was supposed to be at that exact point. But because they feel like, let me just upload it, they use 0.02, and for their mind, they are like, I'm risking 10 to make 20. Meanwhile, that trade will hit TP or even go 1:2, but you are still seeing 1:1. Imagine, right? So it's still the same thing. Okay, so 160, right? One is to 60. I said 1:60. 160. Now, losses is still 240, right? It's still 240. So now, 240 minus 160. 240 minus 160. 240 minus 160 should be what? 240 minus 160. So you came out with what? Minus $80. So this person came out with what? So your account size at the end of the month should be $20. So that is if it will even be there. It might not even be there. That $20 might not be there. Why? Because it has really affected your psychology. You understand? So at that particular point, you are messed up. Even if you like use proper risk management, you might be messed up. You might do crazy stuff and even blow it before this day. Because at that particular point, you know that something is happening. Like, what is going on? I used to have wins now. I used to have profits now. I used to have losses. But why is it that the account is going down? This is the result. Nothing. It's not like the leadership is following you. It's you that is doing yourself. Because even in a proper business, you are not meant to do this with your accounts. So this $20 you are seeing profit. Some people you might not even see it too. It is gone, far gone since. You get it's far gone totally. Because at that particular moment, your psychology is being messed up. Like you're not even thinking straight. You blew it. So you see the problem with that 1:1. Now there's this guy, I've forgotten his name. I think he's a student of this person. What's he called? Q Banks. I know many of you knows Q Banks, right? Sorry, many of you know what's Q Banks. Okay, so now he said something. He said whenever he places a trade, let me go back to that trade as an example. Let's go back and use that trade as an example. So let's say this trade is like this. Whenever he places a trade like this, maybe calls it out on his group or something, he said there's one guy, this is their stop loss of 15 pips, but the guy's stop loss will be like maybe 10 pips. Let's say 10 pips. Let's bring it down. Maybe all these 9 pips. That's what the guy do. You get. So sometimes they might do maybe 30 pips stop loss. Maybe they trade based off points. It might be 30 pips. It might be 40 pips. But the guy's own will now be maybe half of that stop loss. You get. Might be just half of that stop loss. Right? So now, but then again, some trades will come, hit the guy at, and it will not hit the Q banks, other people at. And they'll be like, what's wrong with this guy? Every time he'll be reducing his, when he reduces it, maybe gas is 15 pips, he reduces it on to 10 or 9, then he goes and calculates it using that same risk management, calculates it, and it will give him a bigger lot size, right? And he will do it. Right? He will enter the trade. So one thing is that anytime some trades that will not hit them Q bounce out will hit him out. Trades will be hitting him out. Like you get some trades will just be hitting him out. But the thing here is that the one that will go in his direction and hit TP would recover all those losses and still put him way above, like way ahead. So they notice that at the end of the month, this guy is the one that has to make more profits. You get. That's one thing. You understand? That's one thing. So at the end of the month, he will do what? He will come out with what? Huge profits. How? Right? Now, this is it now. This is when he now review the guy's account and trade. He notices that their guy trade, the stop loss is always smaller, which makes the risk reward always bigger. Yes. Which make the risk reward always bigger. So if he likes to lose 3 trades, 4 trades in a row, or 5 because he used to reduce his risk. But one trade that will give him 1:10, 1:8, he will recover everything. And that's why I said, first off, understand your strategy, understand your strengths, understand your capacity so that you know how to risk. If you feel like you used to lose 5 trades in a row, then reduce your risk so that your account can survive any 5 losses in a row, and then maybe the next win would now give you profit and even push you way ahead. So you should know the risk reward now. You should pay attention to. So if your strategy is that gives you low win rates, right? Then what you should do is like study it very well to increase in terms of risk reward. That's what will help you become profitable. You don't even need to change it. Work on it very well and know that okay, since I'm having losses, I'm holding to the hit stop loss, I'm holding, then my winning trade I should also hold to his TP. Which I know that if this one hits me TP 1:5, all those 5 trades in the row that I lost, I will recover them and my account will be back at break even. So from your understanding yourself, understanding your strategy, right, you can now know your risk appetite, the risk you should use. Okay, so that's one thing. Okay, so risk reward is also one thing you should do what try as much as possible to pay attention to. In as much as you understand your strategy is just what foundation. Strategy is what foundation. I think I saw something online now. Let me take note of it before it passes. Okay, nice. Big fees. I love this. Okay, I think I saw from Nandi said something. Say, but Toshi, I have come to realize I win 2 trades. Okay, in a 10 trade scenario with 1:5. Okay, RR. In if the month is bad, I end -4%. So if you win 2 trades in a out of 10 trades in a like, let's say you lost 8 trades, you won 2, and that is 1:5, 1:5. So that 1:5, 1:5 has recovered 10 trades profit because 1:5, 1:5, that's 10%, and you lost only 8%. So you should be up 2% if you followed it properly. Yes, you should be up 2%. That is in a bad month. You get losing 8 trades in a row, or losing 8 trades and just winning 2. That means you should be up. That is, if you are following 1:5, you should be up 2%. That's why I said understand yourself very well, understand your strategy very well, so that you know that can I lose 8 trades like directly. So from there, I'll know that my account is $200. If I lose 8 trades directly, how many trades? How much is that account remaining? So from there, if I know that it's like that, okay, let me now be risking $10. Okay, $10. If I lose 8 trades, that's $80. Now if I win 2, 1:5, 1:5, it recovers everything directly. That's the flex. So it's not until you win 10 trades in a row. Yes, that is in a good month you can do it. In a good month, there are some months you don't even lose at all, back-to-back wins. Okay? Okay, so that's one thing risk reward. Risk reward is one thing that makes you treat your trading as what's a business. Now let's go to trading psychology. I don't want to throw more light on too much on this, but I think there is a template I do share with my students, most of my students too. There's a template that breaks this down very well and tells you how much you should come out with. And even if you don't come out with that exact amount, it should be something close or something less a bit. Okay. So now let's talk on a bit of trading psychology, right? Let me delete this. Please, I hope everyone is following. Let's talk a bit on trading psychology. Don't worry, I'll come and answer our questions. Just relax, everyone relax. Let's talk about trading psychology a bit. Don't worry, I'll explain all those things very well. I'll explain all the services and everything. Just having issues, we'll get it fixed real quick. Okay, so I hope everyone is following. So if you're following, just try to there are some people, yes, I've posted it and tell people that I only have one Telegram channel, like one, what's it called? Open public Telegram channel. I have only one. This Stfx, I think I've pinned it. Let me even pin it again. But most people will still be falling victim. I don't do investments. Since I even started trading, I've not traded like funds for any investor. I don't like stress at all. Once I'm like this, I don't like stress. But people will still be investing and doing all this. So this is the only Telegram free public Telegram channel I have. Okay, so don't make mistake, don't fall victim, okay? So this is it here. Trade your own personal fund. If you understand how to trade very well, trade your own personal fund, scale up. Take some certain risks sometimes. That is, if you have scale up, first of all, start small gradually. If you've gone to some level, you can now split some funds for crazy risks. Know how you split it into 5. That's why I said understand your strategy very well. So in case you split it into 5 places, you know that all those 5 trades cannot go in against me. One that will go in your favor would give you crazy profit, give you more money for more crazy risks. Okay, you get. So that's one thing. Even as a beginner, I won't even advise to start trading for investors at this particular stage. It will affect your psychology because at that particular moment, what you are doing there, you are trying to impress. You will be trying to impress them, and it will affect your trading. And you might be a good trader, but that particular stuff will just mess you up. Okay. Oh, I love this. I love this. Samato, I love that. Thank you, thank you. So let's go straight. So if you can hear me, type one again in the comment section. If you are following, if you are enjoying the class so far, just type one in the comment section. Type one in the comment section. Don't worry, I'll answer all questions. Don't worry, just relax. Don't worry, just relax. I'll answer all questions. Sure. Today is the last day. Yes, I will try as much as possible to answer all questions. Okay. So now everyone is following. Yes, thank you, thank you. So now let's talk on trading psychology. I used to say it. I'll keep on saying it. That I personally break trading psychology. This trading psychology has into two parts. First off is what fear, and secondly is what it increases towards greed. This is the two. First off, I like the two most important ones that I break this trading psychology. First off, the foundation of everything in trading psychology, all this trading issue used to have is fear. Is fear, nothing else. Now, there's a saying that in forex term, or I normally say is that if you if you if you are afraid of losing an account, right? If you are afraid of losing a particular account, as you have funded it, it's better to do what? Withdraw it and leave. Yes, I will say it again. Once you are afraid of losing an account, don't fund it. Once you fund it and you are still afraid of losing it, withdraw it. Don't even trade it. Why? Because once you are afraid of losing the account, you have lost it. Yes. So most of the issues we have in trading, especially when it comes to psychology issues, is fear. It's always fear. Now, do you know why demo accounts used to grow very fast? Have you ever asked yourself why demo accounts grows crazily? You see that you fund, you just take a demo account of sometimes it might even be $100, and you see the person stacking, doing crazy stuff. Before you know, the account is up to 1K. Before you know, it's 5K, 10K, right? Sometimes it might be 10K, you fund 10K. It's not funding like demo, and all of a sudden the 10K is straight up pure. Before you know it is 50K. Why? But all of a sudden, you come to a live account and everything changes. It's as if they use that one to, how will I put it, to lure you in into trading live accounts, and now your whole money is gone. No. Now, do you notice something that once you experience that particular stuff with your demo accounts, for those beginners, once you come into trading, there's this thing called beginner's law. You can still replicate that same demo experience on your live account. Yes. That's why people call it beginner's luck. You can still fund 1K and take it to 5K, 10K as beginner's luck. Okay? I don't know if any of you have experienced something like that. I want to explain why, right? So at that beginning stage, you notice that as some beginners, they call it beginner's luck, right? Some beginners will now come into trading. After doing that, demo trading, picking that money to a crazy amount, they now confund the amounts. Before you know it, they might flip it to 50K, they carry it to 50K, 100K. But all of a sudden, that particular stuff starts fading out. Maybe when loss come 1, 2, 3, the whole account is gone. You understand? Something changes in them. Something changes in what in them. Fear comes in. Yes, fear comes in. That's what happens first. You get it? Now, why is it that they were able to replicate that same thing? Now, one thing that happened first was fear was not in them when they were demo trading. There was nothing like fear. Any trade that meets the setup that they know mentally, they pick it. Yes, they go fully in on it. Like 100%, they believe that, okay, this is what I've learned. Okay, let me try it out now. Once I see that setup, I'm entering. Once I see that setup, I'm entering. Okay, even if it hits me out, I will even go bigger. You get, they were not afraid. Now, why is it that some people now start funding and all of a sudden it starts back to back losses? It's because as you funded, you'll be like, okay, I've tried this on demo, but now I've funded. Let's do small, I beg you don't want to blow this account. So once you have that mentality, you become selective of your trades. Yes, that's what happens now. Nothing, no big deal. You become what? Selective of the trades you take. Yes. Now, once you become selective, this is what happens. Once you become selective, forget about it. You understand? Your account is gone. Forget about it. You'll be having losses back to back. Why? Because when it's time to buy, I'll write it down. When it's time to buy or sell, sell. If you are selective, you won't want to buy. You won't want to buy. Yes, that's it. When it's time to buy, you won't want to buy. That's being selective for you. For me, Steph, that's being selective. You get. When it's time to sell, you won't want to sell. So imagine being selective and you know that clearly when it's time like this, you won't want to do it. Then it means that you'll be picking the wrong trades. Now, this is what will happen. This is what happens mentally, psychologically. Now, once it's time to buy, you see a trade, you'll be like, hey, this is real account though. This is not demo, right? So be careful. Oh. Should I enter? Should I not enter? Okay, let me enter. And it hits loss. Wait, just pay attention to this. Because sometimes we used to feel like we just want our first trade to always be profit so that they at least everything should be sweet for that month. But it doesn't happen like that. It doesn't work like that. You get. So now this is it now. So once you pick that first trade, maybe it becomes a loss. And from there you'll be like, hey, first account. I funded now I reached $10 out of my $100. I've lost the $10 or $15. You get, that's one thing. So now the next trade, it has affected you. If you're not careful, if you don't understand these things of risk reward and all this minor stuff, you get understand your strategy very well, it has affected you. Because what you now think is that the next trade I don't want to lose you. This next trade, you'll be thinking, should I enter? Should I now enter? I don't want to lose. What if this trade hits my stop loss? Should I enter? This trade might hit my stop loss. You get, while you are thinking, you might not enter that trade. You might be there arguing, it has gone already. I cannot enter again. My stop loss will now become big, and that trade will go hit your TP. And those kind of trades are trades that will hit your TP and be shifting your screen. You know those trades that as it's going in your direction, is shifting the screen of your phone. You get, it's just pushing up. Maybe if it's a buy, it's just shifting it going up, and it will now, once that trade hits your TP, because you did not enter, just go hit your TP. All of a sudden, it will affect you, and you'll be like, hey, now this trade I would have recovered my losses, I did not enter. It has recorded up here. That's why they used to say, don't let your losses get to your head. Is it get to your heart? Sorry, and don't let your wins. Sorry, don't let your losses get to your heart, and don't let your wins get to your head. Right. So now at that particular point, it has gotten to your heart. Like there's nothing you can do again if you are not careful. At that particular point, you start messing up because you feel like the other trade I was thinking about it, I did not enter. Now, let me not even, this one says you might not even think right because you'll be like, the other one I was delaying and it just went in my favor. Let me enter this one directly, and you enter that one and that one becomes a loss. It's normal. It's not that village people are following you. It's normal. So one thing you need to do at this stage, this is New Year. A lot of you have did some kind of promise to yourself that this is New Year, you want to go hard. One thing you need to do at this particular stage, first off, when it comes to trading, understand the strategy. Now, I was saying something that if you master risk strategy, risk management, and understand risk reward very well, if you master your strategy. But strategy is the foundation. If you don't have a strategy, then what are you doing in the market? So strategy is the foundation, then follows by risk management, trade management, and all. We have trade management. You know how to max, because there's a saying that you need to maximize your losses and minimize your losses. Maximize your win and minimize your losses. Sorry. Okay, so now if you can fix these two, you get risk management, risk reward is inside, everything is inside, and strategies comes with the partner and complete, right? So if you can fix these two, you won't have problem with this one. Yes, you won't have problem like that with fear, because one, you will be like, if I lose 3 trades, 1 trade, you get, and again, you won't be selective because you feel like any trade that meets my confluences according to what my strategy tells me, I'm entering. Now, I used to say something, when you are doubting a trade, that's the best time to it. Now, this is what I used to do. Now, let me show you one thing I used to do. Example. When I have an account to trade, and maybe I'm carrying people along, because that's when it's not even easy. When you're carrying people along, now, and this is what I used to do. Remember, when it's time to buy or sell, you won't want to buy. So what I used to do is that, as I'm doubting, Are you sure this setup will go in my favor? My hand is close to that buy button or that sell button, depending on the trade direction. That's what I used to do. So as I'm doubting, are you sure this trade will go in my favor? Should I enter? Should I not enter? My hand is closed in. So that I will do mistakenly and press it. Because I know I've noticed something that trades that I doubt a lot are the ones that used to go in my favor and hit my TP. I'll go beyond my TP. Yes. Trades that we doubt a lot are the ones that used to go in our direction and even hit our TP. And if we miss it, it affects your next trade. So while I'm doubting, I'm entering. Yes. Right. Will this trade go in my favor? Will I have entered it? Yes. Anything won't happen here. Because I've entered it already, anything won't happen. I've noticed that those trades are the ones that used to be in my favor. Most of the time. So if I'm not selective, because when you are trading a demo, you can't be selective. Now, if you are not selective on your live account, you are picking all trades. You can't tell which of the trade will go in your favor, 1:2, 1:3. So since I'm not selective, anyone that goes, yes, it recovers my account. Anyone that goes in losses, boom, that's it. That's it. Right? That's one thing. Fear. Fear. Shams, I don't know how many of you know Shams. Shams Musa said when fear died in him, that's when he became profitable. When fear died, because he was like, he will fund an account, he will pamper the account, the account will blow. He will fund account, pamper it by being selective, he will avoid some certain trades, he will try just to pick the right trade. You can't be right all the time when it comes to trading. Yes, you can't be right. So he said when fear died, that's when he became what? Profitable. So he was like, anything will won't happen, make it happen. If I fund this account, if I pamper am, it will still blue at the end of the day. So what's the essence of now pampering the account? Anything that wants to happen, it should happen, and that was it. That was it. So if you can defeat this fear, now this fear comes in different form. That's one thing you should know. You should get fear of missing out. Maybe you were waiting for a setup, and all of a sudden the market reverses from one pass and starts going your direction. If you are not careful, it will affect you. You know this thing about discipline and patience, being disciplined and patient. It goes a long way. So if you are not careful, it will affect your next trade. Now, the next trade, if you are waiting for market to come, and all of a sudden you're seeing that the market is looking as if it wants to reverse, and you now jump in on that trade because of fear of missing out. And now, this time around, the market now comes to where you were expecting it. After hitting you out, it comes to where you were expecting it. Now, once it gets to that place you were expecting it, if you are not careful, you cannot enter that trade again. Yes, you'll be having double thought. Meanwhile, that's where you were waiting for it to, but because of fear of missing out, you jumped in early, right? And now it hits you out and comes to that place. Now, because of fear, you won't want to enter again because you don't want to lose again. And all of a sudden, that market now reverse from where you were waiting for it and now hit your TP. It has recorded that psychological. It has recorded somewhere in your head, and it will affect you throughout. So that's why I used to say, before you trade, make sure everything is planned out. Treat trading as a business. Plan before you venture into it. Plan. If you don't plan well, then it means that you are planning to, you are preparing to fail totally. Okay? Hope everyone is following. So, first enemy of trading is fear. You used to be on a trade and you feel like, this trade, I didn't use crazy lot size now. I would have made profit. What made you not to enter that lot size in the first place? You didn't want to lose the account. So, one enemy of trading you get is fear. So, if you can fix the strategy, now strategy comes, this is where trading plan comes in. Right? Now, inside your trading plan, it tells you the confluences you need to see before you pick a trade so that you don't become selective. It tells you the risk management for, that's why I said each account should have a trading plan because the risks on each account are different. This one might be high risk, this one might be low risk, so each of them must have their own trading plan. So inside your trading plan, it contains what? The confluences you see before you pick a trade. It contains your risk management strategy you get on that particular account. It contains your break-even rule, right? That is if you have any. It contains your exit strategy, as if you have any. You get those are the things that comes in your trading plan. So since I have a strategy, I have my trading plan set out because I don't want to fail, right? And also, I understand my minimal risk to reward that I need to pay attention to. That's what is also in your trading plan, right? I'm disciplined enough to follow it. I understand my section to trade in. I don't need to violate it because of the fact that maybe I'm seeing others doing trades and all that. No, because that's them. This is me. What works for them might not work for me. You get that's why I said, in as much as you are learning from someone, doesn't mean you must do the same thing that person is doing sometimes. You might just go pick one or two things from there, build on what works for you, and boom, that's way trading. I will come to that. Don't worry, we'll come to that. Let me skip that one first, right? So first off, if you can build all this here won't be a problem. No. So even I feel like losses is part of forex, right? And I know that even if I have 3 losses in a row, one trade can recover it. Because me is also what my trades are 1:10, 1:8, 1:6. Minimal risk reward for me is 1:3. You get minimal is 1:3, not just this 1:2. You get. So that's one thing, right? So now, if you can fix those things, you see that you'll not be afraid of losses again. So once you are not afraid of losses, that is the first step to being profitable. You get that is the first step of what? Being profitable. So if I just love this question of this person asked, he said, what is your first step, like your advice for a trader starting with $100 and wants to grow it to pay for mentorship? If you can grow your $100, I feel like what's the essence of paying for mentorship again? You are good already. You have a strategy. You have what it takes to grow your $100. You get just keep on doing it consistently for a long period of time, and it will pay off. I feel like what you even need again is not even to learn from the mentor or strategy or anything. Maybe you just want a community, and that's all. If not, for you to build your $100 to a particular amount, 300 consistently, then it means you are good already. So you don't even need distraction. You should meet all those telegram that are calling signals for you and like lock in. You get. So that's one thing, right? Nothing else. Don't anything you are looking for in mentorship is just for community, nothing else. Because for you to grow your account, you are good already, right? You don't even need to change your strategy. You don't need to anything that will confuse you. Just do it repeatedly. Now there's this quote that Bruce Lee said. He said he does not fear a man that does 1,000 different style of kicks. You get, but he fears a man that does this in one kick 1,000 times. Because why? That person would be good at that kick that if he hits you, you know that something hits you. You get. So that's one thing. So now, if you focus on this particular stuff that I've mentioned, you notice that this fear you've terminated it because once that fear is dead, that's all. Now the only issue you now be having is now it will move to this grid. Yes, you are not afraid of losses again. Now greed will be the problem. Yes, you know why? If you now go and watch all those lifestyles online and come back to your account, you look your account look at you. You look your account look at you. Your account will be telling you don't try that thing that is in your mind. You look your account look at you, you get. So at that particular moment, if you place a trade reaching $50, there's this thing in your mind that this guy did $50 to 1 million, like to 1K, 5K, and I need to buy something. You get, had it been I reached $300 now on my account, this account should be showing 1K. Different things will just be coming in your mind. If you are not careful, if you are not careful, that fear that you violated will come back again. Do you know how it will come back this time around? I've experienced it. Do you know how it will come back? It will come back that it will make you feel like anytime you fund accounts, you don't used to withdraw. What is it? You'll be afraid to fund accounts. Yes. That's how it will come back. You now become afraid because you feel like I just carry my profits from my other business, just the deposit for my account. That's where they go. I know if you fund again, you now become afraid to fund accounts. Why? Because you feel like anytime you fund, you don't used to withdraw yourself. So at this particular stage, know that this thing is a gradual process. You will get to that level where you can separate 1K just to flip or go aggressive. But first off, I see those people, I see their lifestyle nice, I will get there. But first off, they started somewhere too. That's something you should know. They didn't just wake up one day and started flipping. Sometimes you might even see their profit 50k, 100k. Yes, but you don't know how many years they have been in the game. You get, and you don't know their account size. So imagine someone making 50k, risking maybe he funded 1k, risked everything, and you are saying 50k, 30k. You don't ask yourself, that means this guy have this 1k plenty now somewhere. He can afford it. But me that don't, even if I fund 1k and I try that rough play and it goes, I might not sleep. Then it means that that's not what you should be doing at this particular moment. What you should be doing is trying to protect your capital at this particular stage, trying to build. So if I can build that 1k gradually, 2k, it will take time. It will be like as if it's slow. Maybe from gradually 2k, maybe it takes 2 months again before you get to 4k gradually. Once it gets to 10k, you can confidently say, let me move 1k and put somewhere. Okay, let me be doing 200 flipping like crazily. Same trade I'm taking under my other 10k or that 9k that is remaining. Same trade I'm taking there with proper risk management. Now I'm funding $200 to use crazy risks on it, crazy lot size. I used to teach my physical students sometimes some trades or some times that they should go, because sometimes you need to take some certain risks to get some certain results. Yeah, but you need to build capacity first. You get it? You need to do what? Build capacity first. Don't rush the process. It's a gradual. So now that's where greed comes in. But first off, the main one is this fear. The foundation of all evil, all psychological issue in trading is what? Fear. Okay? You understand? So that's one thing. Okay? So if you can fix this first one, you won't have issue. I don't want to confuse you again. I want to go more deeper. Now I feel like it's time to even answer questions. No more too much talk. Because I feel like some people will be like, you are talking too much. Can you just chat? Can you just you get? So just asking for what I'm expecting. I already did that yesterday, right? From our top down analysis. Okay. So I think it's time to even answer questions now, because there are some things I might not make mention of, but maybe if I see it in the question box, I will still answer them. Right? So now you can start dropping your questions. Start dropping your. Please don't spam. I will be going through it. Now I see something question from Sylvester. He said, "How do you develop a strategy when you've learned the technical information?" Now, one thing if you notice now, my boss trade GBP it's now that he even now starts posting other currency pairs. Like, okay, so now, but before I know that he trades GBP I personally started with what? GBP USD. Okay, now, but what now changes? Why did I now enter gold? Now, one thing is that you should understand yourself, understand your type of person first, right? So I felt like it was too slow for my liking. I love something that is very straightforward. If you are hitting me out, you are hitting me out. If you are going in my direction, you are going in my direction. Straight up. Okay, that's one thing. I just want something going straight in my direction. So what I now did is now I said, okay, since I want a volatile pair, right? What I did now is I pick different conferences and tried it on gold. Is it working perfectly? Yeah, okay. I backtested it on it. Is it working? If it's not working, I remove it. I look for other conferences, things I can add to it to top it up. Okay, so if you've learned, develop a strategy and learn some technical information and all that, what you should do at this particular moment, if you want to develop a strategy, is check if that particular stuff, that whole information you've learned so far. What I will even tell you to do is document those your trades, all your trades, be documenting them, so that you'll be able to filter the noises from the actual stuff. So that you'll be able to filter what works and what doesn't work for you. So from that one that works for you now, the way you can develop is now start adding things that can perfect it. How do I now pick better entries on this particular one that works for me perfectly? You get. So from there, it will be very easy for you to develop your strategy. You can now add other conferences, other stuff again to make it top notch. Okay. Okay. So now let's move to another question. Now, what's the best template to journal a trade? I want to start journaling my trade. Now, there are different platforms. You get softwares and everything for journaling of trade. But I personally, the one I use, right? The one I personally use is, and I used to advise my students to use, which is even more. Let me even pin it. Okay, yes, is Telegram. Just your Telegram. Open a free channel or a private channel, right? So open it and be sending the trades, all your trades there, be sending them there as signals. Yes. Snap the picture on your trading view, send it as signal. You can even do post analysis, maybe a video, and say, okay, I'm trying to buy gold from here. This is what I'm saying. These are the conferences. This is this. Let's see how it goes. After the trade, still do the same video, send it to that group, that Telegram channel. You know, you can still log in on another phone and still see your videos there. So at the end of the month, come back and review all those trades. You'll notice that there are some stuff that repeat itself regularly that you might not be paying attention to, that will be causing you to be losing some certain trades. But now, since you've seen it, you now know that, okay, what should I perfect now? How do I grow? Okay, next time if I see something like this is the best place to enter it. You've learned something. You've grown. Okay, so that's it. And you can see the picture of the trade and writing it on a book. No, I don't even advise you to even write it on a book. Why? Because I feel like even if you draw the hard time on a book, coming on the chart, you might not be able to recognize it. So, but if you have the video, the picture, you can track it back on the chart and see what happened later, right? So let's go to the next question. What's the best time? London and New York session. London and New York session. Now, Seth, gold even moves crazily too during Sydney section, Asian section too, right? It moves now. So, but mostly London and New York session. So I'm an intermediate trader trying to decide whether to join the lifetime mentorship. Now, the difference between the lifetime and my, because this one is just questions from someone else, right? So the difference between this lifetime mentorship and my monthly mentorship, although it's just now that I started my main mentorship again. Before, like I think towards the ending of last year, I was just focused on the lifetime mentorship. You get those Empower 10K because that was my goal, to train people that couldn't raise funds for trading. You understand? So, but now I've brought back. So the thing is that the classes that I have on my main mentorship are different from the ones I have on the, you get. So I'm more available on the main mentorship, and we do challenges. There's even a challenge we want to do now, right? A problem challenge. You get, those in my main mentorship have access to it and all that. So those are just the difference. But if you're intimate, the both are still okay, right? The both are okay. It just depends on what you want. It depends on what you want. Although I locked the what's it called, access for the lifetime, but I can still open it later on, right? But that's just the difference. That's just the difference. And the classes, you get all the classes in the main mentorship. I'm the one handling it, but the ones in the lifetime mentorship, not just me. Okay, with my other educators. Okay. So what else? What else? What else? What else? What else? How do you take sniper entries? It's the same thing, up those F1R zones directly without extra confirmations. Like I believe that, okay, uptrend, support level, the F1R zone below, right? Boom, I believe it will hold and I enter directly from that line, that F1R zone. Okay. So I'm trying to answer all questions. Don't worry, I'll answer all questions. I'll try as much as possible to answer all questions. Currently, I have lost 5 trades in a row with 1:3 risk reward this January, which I'm having a drawdown. What should I do? I want to try 10 trades. So you lost 5 trades in a row, 1:3 risk reward. But if you lost 5 trades in a row, how many trades you won? Have you not won any one yet for you to be in a drawdown? Because if it's 1:3 risk reward, 2 wins, you are up back again. 1 win, you are just in drawdown of 2%. So I don't know if you have not won anyone. Right now, in cases like this, what I used to do at this particular stage, I used to say anything. That's why I used to say your risk management matters from the start. Anything you know that you cannot maintain in the long run, don't start with it. Now, remember when I asked that question from that $100 account, asking how much can you risk inside of it? People were saying 50, 20, 10. You understand? So I used to say something. If you lose 5 trades in a row, can you still use that risk? If the answer is no, don't use it in the first place. So if you are risking 2% on your prop firm and you lost 3 trades in a row, down 6%, will you still be able to use that 2%? No. So if you risk $100 and you lost maybe 5 trades in a row, and you're down 5%, we used to be using $100 to risk. If it's yes, yes, then you start with it. But if it's no, don't start with it, because imagine losing 5 trades in a row, and all of a sudden you now reduce your risk to half of what you were risking before. Now start risking $50, and maybe that one now goes in your favor, and you just recover only 100. Maybe 1:2, you recover 100. It doesn't make sense to me, because that was initially what you were risking. So it's better to not even start with it. Start with what you know that you can maintain in a long run, because trading is for a long period of time. It's not a get rich quick scheme, it's a gradual stuff. So I need to sustain my accounts during both hard times and good times. Okay, that's it. Okay, trade with Dr. PFX, and just chat me directly. If you join my Telegram channel, you see our customer support line. You can chat directly there. Boss, marking F and R zone in a buy, is it high or low? It's the high, but when the candlesticks are different, that's when we now consider the lows. If it's a one candlestick retracement, it's the low. If it's a one candlestick breakout, it's the low. But if it's a proper retracement, it's the high. Okay. You might not say, how do I hold trades longer till TP without fear of losing the trade? Now, one thing I used to say is that if you say you can risk $100, if you know your risk already, right? Maybe if you understand your risk appetite, it will also help. Let's say, for instance, your profit, you feel like I can risk $100. Now, risk $50. You notice that you hold trade for longer. Yes. Because one thing will tell you that after all, you're ready to risk 100, but I'm risking 50. What's the essence of? You understand, you might even hold that trade to 1:3, something that you have not held before. Right? So, one thing I used to do is also setting and forgetting. Don't monitor your trade on MT for hair. Thank you for this question. I've answered this now. Don't monitor your trade on MT4 or MT5 platform. Don't do it. Yes, don't do it at all. You get, if you place a trade, go and monitor it on your trading view, or maybe come back once in a while, check on your trading view. Don't go on your MT4. You know what MT4 or MT5 does if you're monitoring trade day? You are seeing your trade fluctuate, you are seeing your money fluctuate. Like, you see it go down in your face. So if it goes down to you hit your stop loss, it will affect you mentally, because imagine watching your money as it's draining. But if you're watching it on MT4, this trade is going against me. If you hit your stop loss, it won't pain you the way you would have pained you had it been the way watching it on your MT4, MT5. Okay? So don't watch it on your don't monitor the trade on your MT4, MT5. Monitor it on your trading view. You get? That's one thing. So that fear of closing that trade won't come in. Because now, if you're monitoring it on your MT4, you see it came -50, then all of a sudden it's pushing up +100. You'll be like, I saw this trade, then let me close it, let me close it. Then you close it because you're monitoring, you're panicking. Sometimes you might be on a buy, and all of a sudden, market starts showing you reasons to sell, start giving you more reasons to sell. You get? So that's one thing. Don't monitor your trade on MC4, MC5, because you start seeing different things. You are in a buy, your market will start showing you reasons to sell, and you start wanting to close your trade. You that entered buy, your market is showing you that you should sell, because you are just like watching it too for. Okay, that's one thing. So that's one thing. That's it. I think that was even one thing that even made my journey easier. Understanding these things on time. I don't like complicated stuff. I don't like things being too complicated. I love things being straight to the point. Straight to the point. That's one thing. That was really what helped me in my journey and made it very fast for me. I used to tell people this is like my 2 years plus, almost 3 years, right? Almost 3 years now in trading. But I have been getting results even way 1 year ago, self. Like when I started, like 1 year after, you get few months self, I've been getting some results. You understand? So those that used to follow my progress from day one will know this. Okay, so Let's continue answering questions. Where was I? Where did I stop? Where did I stop? Where did I stop? Will I answer all these questions today? Okay. What is your advice for beginners or newbies that is starting out with only $100 risk management? First off, before you even fund your account, make sure you've tested that strategy on all market conditions because market conditions do changes. Now, forex is in phases. You get forex is in what? Phases. Right? There is a phase where you come into forex, you see the lifestyle, you come into it, you trade your demo account, it shows you the reality. You start thinking of Lambo you will buy, how you will flip your account. That is the first step. That's the first phase. Now it brings you to the phases of losses. Now it shows you that if you can defeat and stay in this phase, right, then there's nothing again you need, because if you can defeat that phase of loss, because it will show you the winning part, it needs to show you the losing part so that to balance everything, so you can have this balance. But if it comes to that losing part, that's where some beginners now fail. They now feel like the strategy is not working. They go and start from beginning again, learning another strategy. To now take them months again to learn master, and now they will still come to that phase of losses again, and they will go back again. So you need to stay in that phase. So if you understand all these things and you feel like, okay, it's time for me to fund, understand the strategy very well, then one thing you should do is now know that it's a gradual process. Believe more in compounding, right? And start small. Proper risk management, maybe $5 per trade, you get max 10. But at this point, I won't even say you should do 10 because you're a beginner. This time around, you just want to sustain your account on all market conditions, because you can never tell when the big win will come, right? So $5 it means that you need to lose 20 trades in a row to blow your account, right? So I think that one is even gives you enough chance, enough breathing space. So $5 per trade is okay, right? So risk management should be your top priority, right? So that's one thing. Stop loss at all points. Make sure your stop loss is in check. Okay. We are not doing BTC today, so I won't answer that question. It's majorly gold. I already told you that each broker has different contract size. So what you should do is the broker you're using, check the contract size for crypto, and you'll be able to know how to calculate it. How can I treat revenge trading? How can I treat revenge trading? I feel like this revenge trading, all these things comes with the foundation not being faulty. You get, once you violate one thing, either risk management, that's when you give road to all these things. So first off, one thing that I see like the foundation of this revenge trading first is maybe you were saying that you'll be risking $10, but all of a sudden you now lost an amount that was beyond your risk appetite. Then all of a sudden now you feel like you just want to recover it, and at that particular point trying to recover, chasing your losses, you keep on losing more. You That's like revenge trading. You keep on, if you are not careful, you'll be losing more. Sometimes you might recover it small, and instead of you to stop, because knowing that that's like luck, you want to chase it. Now this is one thing you should know about trading, and I know a lot of people will be doubting it. This is one thing you should know about trading. Yes, your first trade, your one trade can be based off luck, right? The result of your one trade, like a trade like this I'm taking now, might be based off luck, but my results, you understand, after I've taken like 10, 20 trades, or how many trades in a month, is not based off luck again, it's based off skill. Yes, that's one thing you should know. My results based off one trade, like I'm trying to enter a trade now, might be based off luck. But my results after the whole trading month and everything, the result I come with out now with, you understand, is now based off skill. It is skill now that will make me not to blow my accounts. It is skill that will make me, even when my losses are bigger than my wins, I should come out with profits. It is skill, it's not luck. It's not luck. That's one thing people don't know. So I just feel like I should tell you now, right? So you should know what you are doing. Okay. Let me try and answer all these questions. The questions are much, but let's try our best. Let's try our best. Let's try our best. Don't worry, I'll try. I'll try and answer all questions. The questions are much, like crazily much. Where did I stop? 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 I think this message has pushed the ones I was supposed to answer up. How do I join your mentor? First off, how to join my mentorship? That's why I want you to first of join the Telegram channel. First of all, to join the Telegram channel. Let me drop the link again. Drop it. All informations are being sent there. All informations. That's why I just want you to be in one place. You get join it first. Join it first. All our free classes, everything, our discounts, promo, everything is going to be dropping there. First of all, join it. You understand? That's one thing there. So you want to be a student, both physical, we have physical class, we have online, right? We even have other educational materials like the Gold Bible 1 and 2. Some people only have the part 1. The 2 has already come out. We even have the Traders Bible, which contains both gold and other currency pairs, synthetic pairs, indices, everything you get using our strategy and everything. That one comes fully packed. We just launched it. I think was it earlier last year? Sorry, December, during December. I guess yes, that's when we launched the Traders Bible. So that one contains everything. So we have other resources, right? So join the Telegram channel. That's where you can see all these informations. Okay. So let's continue. Let's continue. Let me answer all the questions again. Let me try and answer all questions. So I've pinned it again. So that's our Telegram channel. Join it. After this class, I'll start dropping all our resources and everything if you feel like. Okay. Is trading meme coins advisable? I'm not doing it, so I can't advise, right? So I can't advise. So it's only gold and currency pair synthetic indices and all that, right? So if I'm trading currency pairs, I swing. If I trade gold, I can scalp. But day trade, I even swing sometimes, right? Okay, so let's continue. Please, what can I do to stop blowing my Profem account? I have blown a lot of Profems this year, boss. What can I do? Now, this is it about Profems. Now, I was saying something yesterday. Said the psychology behind Profem is the time limit. Sorry, the target. That's one thing with Profems. There's the psychology behind placing targets. Yes, this is psychology. Now, I used to say something. Once you say, have you noticed something that if you say, okay, I want to make 10% on this account, it becomes very hard to make 10%. This 10% might be percent that you used to make on a normal day. But all of a sudden, you say, okay, now let me make this 10%, it becomes very hard. Maybe if you pass your phase 1 and it comes to phase 2 is just 5%. You pass phase 1 with 10%, but phase 2 now, make this 5% and pass, it becomes a problem. The account might come to 3%, it will still drop back, go back to break even, go back up, you get and just be fluctuating. Why? It's that psychology behind targets. Right. So one thing I used to say, either you increase your targets or don't have a target in mind. Just come every day as if you don't look at your dashboard so it's not put you under tension of you still need like 5% to pass this. No. You get just take it gradually. Gradually. Right? So knowing that if you rush it and blow your account, what's the essence? Because there's no time limit for you to do it to pass it, right? So what's the essence of me rushing it and blowing my account? Let me just take it easy now. Because if I rush it and say, okay, because I want to pay bills, I want to do. If you rush it and blow it, how will you now pay the bills? So it's still the same thing. Just do your thing gradually so that at least you know that you have hope than to rush it and still go and blow it. And then the hope that you had is gone. Okay, so what you should do is first remove that link. That is, you understand your strategy very well. Though. That's another thing. Foundation. Check your strategy very well. Check what you are doing wrong. And if you evaluate all this and see that you are not doing something wrong, check your risk to reward. Because one of the things that make people blow accounts instead of your account to increase, it's going down. Is one is risk to reward. Two, the next thing you should do is remove time. This thing target in your mind. Remove that target in your mind. If they tell you to make 10%, target to make 15%. You get target change it. I don't know how you can do it to wipe away that 10% from your mind. Just be trading, flowing. Forget about the targets. Before you know it, you will pass it. But if you have that target, fixed target, you come today say I want to make 5%. Who tell you that you make 5% today? That's trading for you. You can't tell the market how much you should give you. It can give you beyond, it can give you lesser. Right? So that's one thing with trading. Just flow. Right? Um what do you say for someone that is afraid of losing? If you're afraid of losing, reduce your loss. I'm sorry, reduce your risks so that you can be able to pick all trades. So if I know that I don't want to lose this account, I'm afraid, because I used to say if fear of losing accounts, you've lost the account. But now, what you should do now is, if you still want to try trading, then you should reduce your risks. If you have a $200 account, then reduce your risk to $5 so that you have 20 times to try, 20 trades to take, right? So at least I think that's a big one. Okay, so any trade that meets your confluences, since you have enough chance to pick all trades, any trade that meets your confluences, pick it, anyone. If as you are doubting, you'll be entering as you get all trades that means, because you can never tell the ones that will give you a win and put you ahead of your losses you get. So that's one thing you should do too, right? Okay. Okay, so he said, I've been using your strategy, but I have a question. When a key level is marked on 1 hour time frame, right? But it has not retested, right? But it's retested on a smaller time frame. Is it valid? How are you sure that it retested on a smaller time frame? Is it that you respected that smaller time frame and started going to your TP straight, right? So one thing you should do is that if you hit that smaller time frame, one thing I used to know that if a setup does not come to me, I don't jump and pursue it. Either you come to me or I miss the setup. That's one thing. I don't let it affect my psychology. So if it stops on a smaller time frame and go, doesn't mean that the next one will stop on a smaller time frame. You get? So that doesn't mean that I change my concept of entry. So the next thing I can even do is look for other entry confirmations that will tell me, okay, I'm stopping at this particular level, or you get, so that I can flow with it there. Or I split my risks and risk one day and keep the other one down in case it decides to come to that down part. Because my main aim is still my risk to reward. You get, my main aim is still what's my risk to reward, not just the risks, right? So that's one thing too. Okay. So but if you miss that entry and it doesn't come back to retest and takes out the high that it created, then it has given you another entry point. So that's one thing I used to have. I have an entry at the breakouts and I have an entry at the retesting point, the support point. So even if you stop halfway, I will catch you at the breakouts, no problem. If you don't stop halfway and you come to my, I still have an entry there waiting for you. You get, so that's how I treat basically. Okay. No, the color does not matter. Manobar, yeah, the color does not matter. It can be gold, it can be black, it can be green, it can be red, depending on your candlesticks, right? What's the best strategy to use in trading gold? I just showed you the strategy I use on gold, right? I showed you the strategy I use on gold. I think I made mention, okay, it's on the Trader's Bible too, the same strategy, the same concept, but now you add trend lines, right, to it when trading currency pairs, when trading indices, synthetic too. You add trend lines. What is your worst losing streak? I think the worst losing streak I've had is 3 losses in a row. Yes. You know why I don't used to have losing streak? If people here they think I'm lying, you know why I don't used to have losing streak? It's because I don't trade every time. I came into trading because of financial freedom, right? I don't want it to look like a 9 to 5 work. I trade at my own pace, at my own ease. When I say set up, I enter. If I don't see, I leave. I don't stress myself at all. Not that I don't work. I work normally, you get. So, but then again, I don't stress. I don't stress. That's one thing I want to do. I don't stress. It's either it's at my own pace. I don't want to force myself. It's at my own pace. Nothing like forcing myself. Okay? So that's how trading is supposed to be. That's how it's supposed to. Right? Trading at your own pace. Okay? So if you can, yes, if you can hold trades with good RR, even in the bad trading times, you will become profit. I just showed you an example now with 1:2, which is the minimal. And imagine increasing it to 1:3, you see that your profit, that's how your profit is increasing even in bad times. Now, there's a series that I used to do on YouTube. You can go back and watch it on this my YouTube. The Profit Challenge I've done. I did one last 2 years, December. I did one mid last year. We are about to do another one this February now, right? So now, if you notice those challenges, I used to do the minimal risk reward of two, two. It's two max. That's what I've been doing. 1:2. Check all those three. You see, notice that we'll still pass the phase, we'll still get funded, we'll still draw. You understand? We still make profits, even though. So I think the last one I did last year, I think our losses were bigger than our wins, but still 1:2. I think we had 7 losses and is it 4 wins? But still, yet we made 6%. Yes, I made 6% on that account and I withdraw. Why? The risk to reward, risk to reward, risk to reward. Okay, so that's just basically it. Risk to reward is all. It can really help you. It can really help you. But people used to say I over exaggerate on this thing, risk reward, or I overhype risk reward. But it matters. It matters. It matters. Ask all profitable traders the advice on risk reward you hear. Okay. Please, what's your advice can you give someone that is new into FX and no strategy, no knowledge at all, but he has. But first off, before you even pay for a mentorship, what I would want you to do first is, because I want you to pay on that mentorship, but first off, learn from YouTube, learn the basics, learn what Forex is, and ask yourself, is this something I want to do? If it's not, keep your money. Don't try it, okay? So, because there are other ways, I will keep on saying it. There are 1 million ways to make $1 million. Yes, there is 1 million ways to make $1 million. You understand? Forex happens to just be one of it. So there are other fields, right? There are other fields too that you can make crazy money too, right? So first off, check it on YouTube, learn basics, everything, and if you feel like yes, it's something that you can do, then that's when you now need extra knowledge. That's where it can even cut. One thing with mentorship that it cuts your journey short. You understand? It cuts all this time you would have used to learn. But if you feel like you can still do it off YouTube, the problem with YouTube is just that the information are scattered, so it takes a longer period. But if you feel like yes, you are ready to take that long period, then stick to YouTube, right? But if you get a strategy, don't change it. Just stick to it consistently. Pay attention to risk reward, and you're good to go. Okay. So what really changed the game for me was one, this when I heard that saying from my boss saying that Forex is programmed to make you hold losses and cut your wins, but we are meant to do the opposite. So I was like, okay, we are meant to do the opposite. What is now the opposite? That was what changed everything for me. So then I was like, okay, the opposite should be now we should hold our wins and cut our losses. Okay, let me try it. Now, what I was now doing was that when trade is going against me. I was fixing 100. Once it comes -50, I'm not saying you should do it too. It's not the problem, but that was what I was doing to now learn what. Because then I did not know what risk reward was like. To be sincere, right? So now, when it was going against me, once I see -50, I'm missing 100. Once I see -50, I'll close. Then I don't need to hold trades long. Once I see if it's going in my favor, 1:1, I'll close. Yes, I don't need to hold 1:2, nothing concern. But if it's going against me, I'm reaching 100. Once I say 60, 50, I'll close. $60, I'll close. If it's going against in my favor, 1:1, that is 1:1 is $100, right? Because I'm mixing $100, I'll close. So, but at the end of the day, in a week, I will notice that I'm up 8%. Some week, I will see that I'm passing my profit. How? I'm closing trades too early. But why? Now I had to go through my trading history and I noticed that I was doing 1:2, 1:3 without me knowing. Because some trades will go 1:1.5, which is like I'll see 150 profit, I'll close. I'll see 100. Sometimes I might even see 200, I'll close. Why? Meanwhile, I was reaching 50. I was reaching 100, but I was closing it halfway. So I was like, oh, risk reward was the issue. So that's when I started sticking towards risk reward. Then I now noticed what trading is all about, this fear of betting. Knowing that if I can fix these two things, I can defeat this particular stuff, then I won't have issue long run. Okay? Then I know that it's greed out. Then I know, okay, if I can take it gradually and build my portfolio in trading, then I can now have an account that I can be doing crazy risks on. Meanwhile, my main account is my companion account is somewhere building. Yes, before you know it, everything will be smooth, like everything becomes smooth. Okay, so that's one thing. That's it. Forget about the targets. That's it. Targets might just put you under pressure and you just blow your accounts. Please make a video on how to plot your F&Rs and use it to do top down. It's okay. I'll try that. Let's see this new week. I closed a trade with $196, $1,600. Yes, it's a good one. At least it's almost 1:2. It's a good one. Because most of the time you might see $200 before you close it, it comes down a bit. So it's a good one. At least you still close almost 1:2, like almost. It's all that's 1:2 already. Just $4 different. The $4 might be from your commission from the broker, right? So it's a really good one. A good one. Just keep it up with that particular risk reward, and you would see your account growing consistently. And also, if you want to blend in risk management, I think don't trade with demo, trade with FCMO free trial. Follow those rules. They will tell you to make 5% in 2 weeks, but I will say you should make 10%. You get, so that you will notice that 5% they now say you should make, you will pass it very fast. If you have the mentality of making 10%, that 5% you hit it very fast. You get, so that's one thing. Use FCMO free trial so it will blend in risk management. That's how I used to review my students' own, because that's the test I give them. If you can pass it 2 times easily, like successfully 2 times, 3 times, then you are good to go. Because you can't pass it by luck. If you pass it by luck, we'll know that you use maybe crazy risks, and then we'll see everything at the back end, your metrics and everything, right? So okay, so I'm trying to answer all questions now. So I'm answering, Mo is still dropping. Crazy. Like, woof. Questions are more so. Okay. So what else? What else? Let me keep seeing questions. So do you add God to your trading career? And also, please, can you do analysis on God for this week? I did that yesterday already. Yes, 100%. God over everything. Right? I used to, if you check my video, check one of my video when I was expressing my success story. Then I think that's like almost 2 years ago, when I started like 1 year into trading, and I was getting results. I was get then what was in my mind then was buying gadgets. Unlike now, then it was gadget. I was just buying gadgets. Then all right, you understand. So I told you how I went to Shiloh, right? So if you watch through that video, you know that my foundation is always that. My foundation is always that. That's why I say that I show appreciation through my Ray of Hope. Those that follow me very well on Instagram, you know Ray of Hope, my philanthropy platform, right? Where I give back to the street. That's one thing I love doing. I love doing it, giving back, giving back, giving back. That's what's the main reason of opening Empower 10K Lifetime Mentorship, for that fee. Those that knows. Okay, well, what's the trading session do you normally trade? London and New York session. Okay. I trade London and New York session. New York session is the session where market becomes very volatile, gold becomes very, very volatile. Among all the concepts on F&R strategy, I think focusing on the neckline, you understand, neckline break, yes, and flowing with the trend. That's one thing you should also do. Flow with the trend. Don't trade against the trend as a beginner. Yeah, all these things have been making sense. Like Sunny said, it's easier said than done. That's one thing. That's where discipline comes in. That's where discipline comes in. If you are not disciplined enough in real life, it will show in your trading. It will show in your trading. And I love one thing with trading. Trading shows you who you are. It blends you. If you don't blend, you are not ready to blend. You are not ready for trading. You are not ready for forex. It will destroy you. Like it will break you down and then build you again. You've noticed most of the successful traders look their lifestyle. You see that they are now, some of them are calm, like someone that is really profitable. Notice them, they are really calm. There's nothing like pride. Trading will deal with you. You get, trading will really mess you up. Like it will kill that bad character in you. You get, that's one thing. Okay. So I think I've answered most of the questions. So what you will do now before I even end this section, because I want to carry everybody along, I'll still submit the form again for you to fill so that I can reach out to most people again, right, personally. So what you do now is join this Telegram channel, because after this class now I'll start dropping discounts for everyone here for all the services. So if you feel like you want to, or if you don't feel like you can leave, that's That's one thing. Me says I don't love stress at all. That's one thing with me. I don't know why. Someone said trading don't humble am already. That's it. That's something with trading. Trading will humble you. You see that pride that you feel like you have, it will destroy everything. Maybe you feel like, okay, let me just, after all, how much are they paying? You get for mentorship. Let me just do my thing, risk crazily. One day you will read something and the whole account is gone, and like trading will mess you up. You get, so all these things are things you face, right? These things are things you face out of experience, right? So that's why it will tell you that there's some certain lifestyles you don't need to live. You get. That's why we have risk, trade, and we have the money management. If you are not top in money management, you get, you might come back to losses again, right? This time around, it might not be losses from trading, it might be losses from personal life. That's why sometimes as a trader, we pick from forex, we invest in other stocks, right? Because there are some months that might not be a good month for you. There are some months where you might come out as break even, no loss, no profit, right? So that's why as we are making profit from trading, we are investing in other stocks, we are investing in real estate, we are investing in things like that. Okay. So that's one thing, okay? So if you feel like you want to join our challenge, our problem challenge, don't worry, just join the Telegram group and I will drop all the details there, okay? So this is it showing on the screen like this. I don't know if I drop it on here, everybody will just type message and it will just come out. I don't know how, is it possible to even pin it? Is it possible to pin it here in the comment section? So that's one thing. Okay. Okay, so that's one thing. That's one thing. So I'll also pick those that I don't know if you're in Lagos. For those that I would, maybe you join my February physical free. You understand, free mentorship 101. You get, yes, yes, yes. So if you notice, most of my students who are really, really good when it comes to training over a short period of time. It's just because of experience. So I will pick most people from this YouTube. Like that's why I'm saying. I guess most people have left already. So what you do is join the group, right? So if you're in Lagos, you might get to win a free physical 1 month mentorship, right? And you see the result. Maybe when I'm having a live section, you'll be the one now typing. I don't like stressing myself a lot, but the result speaks. So you get, let how did they used to say it? More money, less clouds. That's the flex. Okay, yes, from online, so we'll still have online so free giveaway too, and even discounts. So even if you don't win the free, the giveaway, you win the discounts. Okay, so I think that is it, guys. Nothing else again. All right, so I'll show you, I'll walk you through the process and everything. Okay, you can pin it in the description of this video. Yes. Okay, maybe I'll pin it on the description of this video too, and also in the comment section. Okay. So I think that's all for today. Do also like this video, right? Share it. You can come back and watch it. You understand? Okay. So that's just basically it, right? And bye for now, guys. See you guys in the Telegram group. Okay. Bye for now, guys. Thank you.